what is the difference between an analyst and a trader? They might seem like they are the same thing, that you have to be a trader and an analyst at the same time, but they are actually not the same thing. And the reason it's important to recognize why they are different is because you can be a bad analyst, someone that calls the market and gets it wrong time after time after time, but still being able to be profitable. Now that sounds crazy. And obviously our goal is to be a good analyst and a good trader, because that's when we'll really be profitable and it'll be exponential. But you can also be a bad analyst and still be a good trader. Now let's talk about how that is possible. First, we define what is an analyst. Now an analyst is someone that looks at the market, analyzes the charts, and develops ideas accordingly. They might say, oh, based on market structure, it's going to be bearish. That is an idea. You analyze what you see, then you have a directional bias accordingly, and even potentially describe an entry and stop loss zone. That is an analyst. On the other hand, we have a trader. Now a trader is somebody who's going to take those ideas and they're going to go ahead and execute on those trades, managing as a position, formulating a risk strategy, formulating a profit-taking strategy. Now that's when you start to think like a trader. So what if I told you that if you are really good at being a trader, you can actually overcome being a bad analyst? You can have like a 40% accuracy in where you think the market is going to go. Hell, even 30% accuracy, but you can still be profitable week after week. Obviously, the goal is to be a good analyst, but it's just to show the power of what is possible. And by the way, this is not just something I'm saying as theory, something that's hypothetical that maybe works. No, if you've been following along on my journey on Twitter, on the day of filming today, I closed out 10 weeks of public signals, meaning every single trade I took, I gave live ahead of time. I gave my entry, I gave my stop loss, I told them when to break even, I told you when I was going to take my profits. I've given 39 signals, 40% profit live in front of everyone's eyes. And what is powerful, specifically this week, what I want to demonstrate is that I was wrong all week long. I had an idea that GU was going to do this and then it was going to do that. And even though I've had winning days, winning weeks, certain weeks where I've done over 15% in a single week, but isn't it crazy how this week I was wrong in all of my ideas? However, this week I was still profitable. Even though I was wrong on every single one of my signals, because I had intelligent break-even protocols, intelligent profit-taking systems, I was able to take profit from the market this week, and not an insignificant amount. This week we profited together 3%. Now imagine you just had one max allocation on a prop firm, $400,000, you take 3%, that's $12,000 in your pocket, and I wasn't even correct as an analyst. It's just about having profit-taking systems and correctly understanding how to maximize prop firms. So on my screen, you can see this week's price action from Monday over here all the way to Friday. And this week was just one of those weeks where from a market structure perspective, it was very simple. But those pro trend high probability setups that I was looking for, none of them gave me the entry criteria I needed. And as you guys know, it's super important I have all of my confluences, especially the lower time frame models, for me to justify an entry. So I was able to read the perspective of the directional bias. I was actually able to do that, and it's very simple. We had a supply zone, price made a lower low, we had a retracement to that extreme, that's supply zone over here, and price, we were trying to sell from here. When we made the low in the market, I was looking to buy. So all of these things were fairly simple. You know, reading price action from a macro M15 perspective, super achievable. But the confluences of actually taking the trade, the entry requirements and the time windows and the specific things that I look for, it was just one of those weeks where things didn't align. And that's okay, because other weeks, like I have shown, everything aligns and we pull out 20% in a single week in signals, live ahead of time, completely achievable. So the market will give you opportunities in ebbs and flows. Certain weeks will be, it feels like everything you touch turns gold. And then other weeks will be like frustrating and everything misses, or you just can't get in. It looks close, but you just don't get the exact criteria you need. And you just need to know when it's one of those weeks where you walk away from your desk, where you sit on your hands and take no action. So this week, the prime setups, the obvious zones I was looking to trade, it didn't give what I needed. But there were still certain opportunities for a hedge, for a short-term position, intra-session volatility plays. There were certain scenarios where I could actually see something happening. Now, these are not my A+ setups. These are my average setups, the 50% win rate setups, where I know I can get a decent risk to reward because I play the session volatility. So the first trade we're going to discuss is from February 1st. And this position, I gave a GBP USD buy signal. So let's actually look at the MT4 execution where I actually show my buy entry right at the time of entry. You can analyze all of this, verify it for yourself, and you can see why I took this trade. So not only do I have my MT4 execution, I actually give the analysis on the 30-minute time frame where I'm basically saying price has come to this demand area that led to this push out, a bullish expansion. Price then comes lower, gives a liquidity base, runs that liquidity. Smart money traders love that pattern. Gives smart money traders a reaction. Price comes into the smart money zone, gives them a small doji candle to show them to execute, and then swiftly induces them out, takes them all out. So then I see prices come to the extreme. It's in my time window. I'm seeing lower time frame confirmations, and I'm seeing a smart money trap Asia low with all of this upside target. This determined for me a potential setup. And then when I looked at the M1 time frame, even better, I saw inducement number 1 into my demand, and then a push out. London open, price comes back, does a build up of liquidity, run of liquidity to fuel the move up to make a higher high. So I'm seeing internal price action switching bullish, where we have bullish push, retracement, bullish push, retracement. Then I see the smart money zone, and I see smart money traders are going to be keen to get in. It gives them a reaction, and then price comes down, does an inducement, and this is my zone where I'm entering. This is where I'm giving my signal. This is where I'm telling people to enter. Now I'll go on TradingView and explain. But what I also showed was I had certain doubts of why this trade could potentially not play, is because at the same time, GU, the trade that I was looking at, is in a demand area looking to go bullish. The problem was EU at the same time was in a supply zone that could potentially go bearish to the demand before it goes bullish. So I was thinking, if EU needs to come lower to come into the demand before it's bullish, then GU will also have to come lower. And if GU has to come lower just like EU, then I might hit my stop loss. So that was one concern I had, the devil's advocate, but everything else seemed decent for the trade. But in the end, price gave a good reaction that I wanted. It did a small buildup of liquidity. It did an inducement and a push out. So I'm thinking, this is great. Everything I wanted to see has happened, and I've even got the minor inducement to confirm it. Then I talk about later on when I'm getting a strong reaction. I see that price does that last inducement before really taking off and going towards my break-even point and partial point number 1. So what you'll see here, that zone that I thought EU was going to respect, that supply zone, maybe price is going to come lower to my demand, and maybe I hit stop loss on my position on GU. Well, the reality is price did a small build-up right here. It did an inducement low to fuel the move higher. So I got actually something nice to confirm to me that it's going to stay bullish. And not too soon after, maybe 30 minutes later, I hit TP1, which is that 1 to 3 risk reward. So signal 38, TP1 met. As you know, at 1 to 3 risk reward, I always take 50% of my position size off the table, meaning 1.5% locked in. So now that we're on TradingView, we can actually see exactly what I was mentioning. We had that equal lows, smart money traders love it, that led to a push out. Price came back down, ran that liquidity, gave bullish price action. Price came back down, came to the smart money zone, came to that area. And what did it do? It gave people a bullish reaction to invite them in and then swiftly inducing them out. So when price came to my preferred zone, my demand area, price started to give those reactions I needed. Inducement number 1, bullish follow through after taking a bit of liquidity. Then we have another build up, another small inducement to fuel the move higher. Then we have this inducement right here. And what does that inducement do? It fuels the move lower. So we're going from zone to zone, and inducements are carrying us. Inducements are fueling it. So this inducement was to go bullish and achieve this. This inducement was to go bullish and achieve this. This inducement right here of these equal highs was done to achieve this. And what did it do? It didn't just go down directly. It invited the stop losses of these smart money traders, gave them that reaction, inviting in their entries and swiftly taking them out. Smart money traders trapped once again. Then when we came into this demand area, we needed a little inducement right here, taking that liquidity to then fuel that move out. Now, we can see a lot of things going on, and this is exactly how price action operates in zones of consolidation. You know, in those areas where people say it's just noise or it's choppy price action, we can't read it. No, these are the detailed zones because we reach a zone of indecision. It's a tug of war between the buyers pulling and the sellers pulling, and price is not going anywhere. It's stuck because not one is more powerful than the other. So what you really need is somebody to really take strength, whether the buyers or sellers, and the inducements will show us that. So we can see this battle happening live in time. We can see first the buyers trying and they get a bit of success. Then the sellers trying, they get a bit of success. The buyers try again, induce one more time, get a bit of success. The sellers try one more time and they win. So that's a full story we can read. So if we mark out all the inducements, we can actually start to see exactly the result of these things. We see first inducement, bullish push out, and let's do this in green so we can really see it. That's the first successful inducement. Then we have another successful inducement, this small one right here to fuel that move up to there. Perfect. But now we see this build up of liquidity. So we say, okay, price is building up, and then we have a first bearish inducement. This is the first attack from the sellers. The sellers are thinking, okay, you buyers are trying, but it's not happening on our watch. Then they come down and gives the sellers what they want to see. It gives a bearish reaction, and not only just a bearish reaction, it does a trap along the way, because why not take their liquidity too? Why not take these smart money traders liquidity too? Then once again, the buyers do another inducement here. They build this up, and then they do an inducement right here. So we can see once again, the buyers having their inducement and then having their push out. So the buyers once again battle, try, and succeed partially. But the sellers, once again, they say, okay, equal highs, run of liquidity, bearish push, smart money traders are happy. So we can actually see now the game of chess that is happening, where we have this area that was technically a supply zone, this area that ran liquidity from smart money traders. As you know, they love that typical pattern of build up of liquidity, run of liquidity, bearish reaction. Then you mark out that liquidity, you mark out the inducement, you found the order block or whatever, and then you trade that supply zone, let's say. So that's exactly what happened here. We had the supply zone that took liquidity, price came in. What did it do? It gave smart money traders that false reaction to get in. It even said equal highs, false reaction. And then what did it do? Wiped them out, wiped out the smart money traders here. And then in the end, that was the successful play. And that's exactly what happened. And then we had the bearish switch. And what do we see within that internal price action? We see that price from a demand area that grabbed a bit of liquidity here, pushed out, made a new high, inducement high. Then what does it do? Bearish reaction, comes into this demand, gives those smart money traders a false reaction, does an inducement of that level, mitigates that supply, closes the fair value gap imbalance, and then goes bearish. We can read the language of price and all of these details. Now, additionally, I was actually live on Instagram Live around this time, right here, and I was exactly monitoring this. And actually, if you go and watch the recordings of my Instagram Live, I actually discuss exactly this, where I say, these are our roadmaps. It could be bearish, it could be bullish, based on X, Y, Z, because we are in this zone of indecision. The inducements will lead us. And that's exactly what happened, where when I entered over here, on the buy trade, we saw the manipulations and we saw who was in control based on that inducement. But the moment we had this push out, this bullish break of structure, we have to read the liquidity. So when we saw that, I was actually thinking, well, it doesn't necessarily mean we're bullish. It doesn't necessarily mean we're going to buy from here. This could all be a trap and the sellers could be taking control. And that's in the end why we then came back to break even. So it's not that I didn't call the market correctly. It's that based on the information I had at the beginning, I made a decision accordingly with the evidence I was seeing and based on the confluences I like. I took this trade. I took the buy. I got the reaction. I took a partial based on my partial protocol systems that I have in place, and I was able to secure 1.5%. And then with new information, with a new inducement after the smart money trap, that inducement brought us back to break even. And then we were out of the trade. So it's not to say I was wrong. It was just saying the market updated and there was no reaction that we could actually take this trade on. We couldn't actually sell it because it wasn't valid enough for us. Meaning to say, the market changed, the situation changed, and therefore we hit break even. We thought it was going to come higher. And on another day, it maybe would have. But in this day, the sellers were in control. Okay, in the end, it hit break even, but we still locked in 1.5%. So if you do this multiple times a week where you're wrong, but you take a partial, they compound, they add up. And at the end of the week, if you have 3, 4, 5% through wrong trades that went break even, but you still secured a partial, well, now you can be an analyst that was wrong, but a profitable trader. A trader that was good because he followed correct systems. Let's show you another example from another signal. You know what's crazy? I have so many screenshots of people showing them also taking the same trades. Certain people commenting and saying they actually passed a funded challenge and got funded based on these signals. And another guy here saying, single-handedly changed the way I look at the markets. I will forever be grateful, which is amazing. Phase 1 passed and FTMO at 5% on a live account. Isn't that crazy? This guy might be on the way to a payout just by taking these signals. Crazy stuff. So now as we go forward, I'm going to show you today's trade, which was the same thing, just like the previous trade I just showed you, which was break even in the end, but we still secured a partial. And by the way, a heated debate has been going on Twitter. Do you prefer an SF90 or do you prefer a blacked out Eurus? Let me know in those comments. Anyway, now we come on to today's price action, Signal 39 GBP USD sell. This one was so fast moving because you could see from the moment it gave the confirmation to my entry, it was just a few minutes. But this in the end was the reason for the trade. And I'll cover it in a bit more detail in a second, but we could see that we had a major inducement, price tapped into a supply zone, and we took our Asia high, previous day's high, which is that dotted line, and a structural high, and then we came into a supply zone, and then we're in our key time window. In that key time window, I saw an entry protocol, and I have this liquidity pool to target, and maybe even Asia low. That was the reason for my setup, and you can actually see I'm entering the trade. Right as I enter, I give the signal, I post it as quick as I can, and then you can actually see later on price going all the way to our TP1, whereas 1 to 3 risk to reward. So then we can see TP1, 1 to 3 risk to reward, 1.5% bank. But what's crazy is this trade, it break even. It didn't even hit my final TP. So here I actually show that price is coming to that equal lows area. This these lows that I mentioned, and I'm basically saying this could give an inducement and reverse. And if that happened, it would make sense because we have a pool of liquidity that the market could grab. So if this goes on to hit break even, I understand. And also I did a comparative analysis with EU, and I also went on Instagram Live and explained the whole thing. So do go and check that out. But when I come into that price action on Asia, it's actually telling a lot of a story, even though it just looks like consolidation. It's super detailed because we're seeing prices a supply zone, and it does a mitigation with a small inducement. So we're seeing these cool things. It's showing me inducement over here. So it's showing me the sellers are in control right here. Okay. Once again, price is doing the same thing. It's mitigating and respecting that supply zone. Price is then also coming into this demand area and doing a mitigation. It's building up this liquidity, doing an inducement low to fuel the move higher. Then it does that build up of liquidity inducement to fuel the move lower. This then does a grab of liquidity to push higher. This is a mitigation of the supply to come lower. Then we build up this liquidity, equal lows, run of liquidity, push out, break of structure, smart money trap, final inducement, and that inducement allows price to come higher. So we can see that this was making a pool of liquidity here and a pool of liquidity here, but we can see the small inducements in detail to see prices going from zone to zone. Super critical. So now when we saw this last inducement, we know we can't sell. We can't just jump into the sell. So I needed to wait for confirmations. So what I really saw was price had the high of previous day. It also had the inducement of this structure point. So when I saw inducement of structure and I saw inducement of previous day's high and I saw inducement of Asia high coming all the way up here and tapping into this supply zone that I had marked out. When prices come into this area and then I go to my M1 time frame and I see within my London time window, my key window, I see an entry model of mine. Price comes lower, I take profit. And then what does it do? It does the inducement that I said in my post. It grabs these lows, does an inducement, and that's the fuel to come higher. I once again hit break even. But you know what? I was wrong once again, but I followed my checklist. I followed my entry protocols. I followed correct protocols, and I was able to profit 1.5%. But I was wrong. So now from yesterday's trade and today's trade, 1.5%, 1.5%, I've locked in 3% for the week and been wrong all week. Isn't that incredible? Because now I could have potentially lock in a payout and do whatever I want. Super powerful if you start to deploy these kind of tactics. Now, later on, I mentioned on Instagram Live once again that I want to see this trend line that's being built for it to be induced in my New York window, which is exactly what it did. And then it just melted for NFP. So I couldn't get an entry on that, but oh well. But it just goes to show that these concepts really work. You can be an analyst that was wrong, but still be a profitable trader.